Good Friday morning, Market Chameleons, and everyone joining us for the first time. Welcome to the Market Chameleon pre-market show, and there he is, Dimitri Parkamonic. How you doing, Dima?
Good morning, Will. How are you?
Good. You want to start with the disclaimer? It's up for everyone to see.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker-dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or broker-dealer. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen here. And if you guys are joining us for the first time, we're open to questions. If you guys have any questions on Market Chameleon platform, any of the tools, data analytics, if you want to discuss strategy or share with everyone things that you've been doing that are working out for you, or if you want to share something that you tried and didn't work out for you, but maybe you want to just share that experience because something happened that you weren't expecting, you're welcome to ask those questions or come on live on a show and ask the question directly. The ways to do that is you could post the question on the live chat on YouTube. Will's monitoring them. He'll read it back to me. We're also putting out a link there to Zoom. If you click on that link to Zoom, it'll take you over to Zoom. You click on raise your hand. That you don't have to turn on your video camera, but then we'll be able to hear your question live. While we're doing that, we'll take a look at the pre-market report, see what's going on in the pre-market hours. And while we're waiting for questions to queue up, maybe we'll just take a look at a couple other tools as examples. Sound good, Will?
Excellent.
All right. So this is the pre-market report, and these are stocks that are trading in the pre-market hours. We have a list of the most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 140 stocks made our percentage gainers list, 49 on the percentage decliners list. So right now we're looking like more bullish bias at the open. Let's take a look at the S&P 500 stocks if we see a similar situation there. So I'm going to come up here, and these filters up here control the symbols that get populated down below. And by choosing this an ETF filter, I could choose one of these ETFs. I'm going to do the SPY ETF, which is the S&P 500, and this will filter out SPY holdings, basically. So let's do that. And now we see here, we got 26 on the percentage gainers list, 0 made our decliners list. So right now, we're pretty much setting up for more bullish bias at the open. And I guess what a little bit of maybe what was the driver yesterday? We're down with that, war in Eastern Europe with Russia, Ukraine. It looks like maybe Putin's saying he's going to send a delegation to negotiate.
What's that mean? He shows up alone?
Yeah, he's going to show up alone and decide if he likes what you're saying or not.
I mean, and we talked about this. Every time I see him at the negotiating table, he's the only person there. He's deciding everything.
Yeah. But there are rumors maybe that the Fed will not be as aggressive raising interest rates. So that rumor started going around yesterday when the market was down, and maybe that there'll be a quicker settlement to that, to the war going on between Russia and Ukraine. That's the take I'm getting so far.
Well, I hope so. Not for the market, but for all the Ukrainians. It looks terrible.
Everybody there.
It's terrible.
Yeah. So while we're waiting, one of the things that then to consider, we've been kind of talking about this, is we got certain stocks reporting earnings right now, but in addition to that, we got a lot of volatility in the market. So when you have those two kind of things going on, and you're trying to analyze, earnings, you got to take also the situation that things are going to be more volatile than usual besides the earnings event. And those earnings can be much more volatile, right? We've kind of talked about it, where implied volatility in the entire market right now is very high. We got, realized volatility is very high, let a whipsaw. And then if you add the earnings to it, even though historically, you could kind of take, how did this stock look historically, but that's not enough because it's more illiquid in general. So I'm just seeing here, this is a list of gainers today. And when we get these little alerts, you see like the N stands for there's some headline news out there. If you hover over, you could read it. And this little E is telling that there was also an earnings either reported yesterday after the market closed or this morning before the market opened. And now we're getting a reaction to that earnings event as well. Right. So like here, Square, or what is it called? Did they change the name to like Block? But that's Jack Dorsey's company, right? With payments. They reported earnings right now. It looks like they're up 20.5%. So I'm just going to click on it and take a look here.
I mean, these stocks, I don't know Square in particular, but I'm assuming it's way off its 52-week high. And
yeah. So see here. Yeah, this is by clicking on it, I'm going to get some stats below here. And we see yesterday closed around $95. It was up 7%. But if we look at that 52-week range, it's way off its 52-week high. So way down there, probably set at some point, maybe even yesterday, opened up at a low and rallied like the rest of the market. But right now we're seeing reported earnings and it's trading around 114, right? So up 20%, $19, about up 20%. If we come down here, we see how this was reacting. So throughout the day, it looks like it's been like kind of steadily climbing over here, settling here. If we just take a look at where the biggest part of the volume was around like 111, I would say. And if you come down here, you can kind of get a minute by minute VWAP stats. So it tells you for each minute, we get statistics like how many individual trades happened that minute, what was the total volume that minute, what was the volume weighted average price of all the trades, how did that minute change from the previous minute, the high and low price it traded, and then coming out, what was the bid and offer. So you could see how wide the bids and offers are in the pre-market hours. So that's more like granular look, but we do know that they reported earnings. So let's just take a look at historically how Square reacted to earnings. And I'm going to come down here. Come up here. We do have these tabs here. One of them is earnings, stock patterns. So by selecting that, I get a table with the distribution of returns around earnings. So we have, how did it behave prior to earnings? This is the day of earnings, so this would be today. And then how did the stock behave after, the day it reports earnings? It has a reaction that day, closes. How did the stock then tend to behave after that? So we see here, day of earnings, we're here, and we're around here, the opening gap. So we don't know exactly where it's going to open, but we're getting right now, it's trading 20%. Up 20% in the pre-market hours. And how did historically the opening gaps do? So we see 64% of the time the gap higher, 36% lower for an average gain of 1%. So it tended to gap up more often than down using these earnings, the last 12 earnings. Okay, so these are the last 12 earnings over here, the dates. And if we take a look at the magnitude of the move, if we just take the move and convert them all to positive, like, so we could get a sense of, up or down, how violent are the moves usually. And we see that on average, it's 5.3%. with a high move of 12.6. So that was over here. So this 20% way higher, than the highest we've seen the last 12 quarters. But this has been the theme for this earnings season, right? Fourth quarter earnings season reporting for fourth quarter. And we've seen this because there's just more volatility in the market. There's less liquidity especially when you have to move sizable amounts of stock. It's very hard to do right now. And we've seen it in the higher market cap stocks, Facebook and Netflix and to the upside with Google. So this has been, I actually have a report, but I don't think I could show it. Let me just see.
Wait, is this one of your reports that
Yeah,
you're
this is
working on?
what I'm working on. Yeah, on the upcoming earnings announcement. So I could just tell I'm looking over my shoulder. So just to give you guys a sense of what's going on, if we took all the straddles, right, that are reporting right now since in the first quarter, reporting the fourth quarter, and I'm looking at, there's 1,982 stocks that we track that have straddles. So if the stock doesn't have, if it doesn't have a liquid straddle, we don't include it in there because we can't tell. And remember, the option straddle is if you're buying a call, buying a put in the front month, and if you're buying both in the stock has to move by a big enough percentage to cover the cost of both in either direction, and that will be profitable from the long side. If it doesn't move enough, it'll be profitable from the short side. So I'll give you a sense of what's going on. If you did all 1,982 straddles, every single straddle that came on a board, and you bought each straddle, right, in the mid market, let's say, because we're marking mid market. So if you did that, 42% of them ended up being profitable. 58% were not this following day. Okay, so but that's deceiving, right? Because on a straddle, remember, the most a straddle could lose is 100%, but the ones that go up, they could go up 200% or 300% or quadruple, right? So it depends on the movements. So 42% were winners, 58% were losers, but on average, if you did all of them, right? If you did all the straddles, on average, they gained 3.6%. Okay, so 3.6% on average, and that's a big deal. Think about 3.6% on average, 1,982 times. So that's just to show you that just this season, and it's been the third best season in the last 12 quarters. And if I compared it to the last on the 3-year average, so the 3-year average, only 38% of the straddles were profitable, 62% were not, right? And this is kind of a lesson because I know a lot of people, like to sell strat. So, but and this is, by the way, the second season that the straddles were profitable. But if you took that 3-year average, because of the last 2 quarters, the average is up 0.7%, right? So the lesson is you can't just look at win rate or what tends to happen. It's also, well, what are the returns when the other side hits, right? So if you have 1 out of 4, if you only win 1 out of 4 spins, but the time, the 3 times that that it comes out, 2, 3, or 4, if you lose if you make $1, but the one time it lands on 1, you lose, $1,000, then you're better off having less wins, more losses, because when you win, those average, it offsets all your losses. Okay, so that's kind of like the point I'm I'm trying to make. And I have this report, and I think I'm trying to get it ready, and I think I'm gonna have it ready, within the next 2 weeks, because I'm gonna be doing a webinar on it with Interactive Brokers. So the next Interactive Brokers webinar we do on once a month with Interactive Brokers will be on trading earnings moves, and I'm gonna have I'm gonna have new reports out there, new analytics, and new insights. So it will be ready, but I'm just giving you like a sense of, and as I'm going, I'm just going to do, I know you guys can't see it, but I'm just going to give you a sense of what I mean here. If I took the distribution of all the straddles, all the returns, you guys know what the straddle, let me know if people don't understand what the straddles are, but there we'll go to SQ. In a straddle, simply if I went yesterday, right, here's SQ, it closed 95. So if I bought the 95 call, right, 645, bought the 95 put, 655, right, here's what it looks like. This is, so you see that if it moves, if I'm paying $13 for both the call and the put, that means the stock has to move by more than $13, right, to cover the cost of both those options, right? So yes, the stock is up $19, and that put might be worthless, but the call will be worth at least, right, $19 that I paid 13 for both. So that's what the straddle is. So today, if it opens up here and you bought that straddle, it will be profitable, right? It'll be in the green. You're going to be above here. You're going to be like, where are we right now? 114, right? So you're going to be here. So, and once you're here, by the way, implied volatility doesn't matter, right? Because when you're doing a straddle, you're betting on the move. So if the stock opens here, it doesn't matter what implied volatility could fall to 0. If you sold that straddle, it's already, right, the stock has moved enough that it's just in the money by $19. But I'll give you another stat just to maybe compare. If we took all those straddles, so far, the 1,982, about, and I'm taking the wings. So less than 0.5% of them, after reporting earnings, lost more than 75% of the value. All right. So if you bought it, whatever, for $10, the stock, either moved or didn't move, but implied volatilities came in. But, even if they do, it's not going to 0, right? So only 0.5% of them lost more than 75% of their value if you sold it, right? But 3.6% of them gained more than 100%. So more than so 0.5% lost, a significant amount versus 3.6%, right, that gained more than double. Does that make sense? What I'm saying is to give you guys the extremes, right? So that's, I don't know, what is that? Well, like, almost like 7 times more, right? 7 times as many that doubled in. So that's kind of giving you the extreme distributions. And I'll show you, like, I have the report ready. It's almost there, and I will have it out there in the next 2 weeks so you guys could take a look. And I think that I checked on the S&P and QQQ, kind of similar stats on those. And right now, what we've seen is, let me just come over here. So we could see here this bar over here. That's today's bar. This is what the straddle was pricing in up or down. That's why you see the bar up or down. And these were the historicals, right? So you could see that this bar was pricing in a move of 13.6% in either direction, up or down. And you see here right now we're up 21%, so that breaks through. And even though this bar is higher than any of these historicals, right? So you could see like we didn't have 13.6%. Even though it was higher than all these historicals, the volatility in the market, it didn't matter because the markets are very illiquid. It's not just the earnings, it's the earnings, and you got a lot of illiquidity in the marketplace. Like let's just take a look at SPY here. Here's SPY IB up 9, it's in the 97th percentile. So there's other things going on. And we say that, look, even when you're doing analytics and you're looking at a certain situation, you always have to take into consideration not just the historicals, but what's going on in the present, right? What else is going on? What is different today than it was in history? And how do I handicap that? How do I compensate for that? So those are kind of like the insights I wanted to talk about. But if there are no questions and it's Friday, we could just kind of
Magic Friday.
Magic Friday.
Let me just go through. It's a little delayed in the
Okay.
Nothing major. There was a real good article that we didn't get a chance to discuss beforehand that Robert sent over. We'll take a look at it this weekend and maybe get to it on Monday. It was concerning the VIX and volatility and putting together portfolios. But it was, I briefly looked at it and we didn't get a chance to discuss. So maybe we'll get to that Monday. Rob, you can come in and ask any questions if you want on Monday about that. I did post the article for everyone to read in the chat. Dima, great job. Have a good day trading today, and we'll see you on Friday, but Monday, my friend.
Yep. So, thanks everyone for joining. Stay safe out there. Have a great trading day, and hopefully we'll see you Monday.